as you look towards what's happening with the Fed, is there anything that the Fed can do or say on Wednesday that will surprise the markets, given what we've already heard? Forget about telegraphing. We've heard straight up from Fed Chair Jay Powell, it's going to be 25 basis points.
Yeah, it's a really point-on question, because you're right. Powell has already managed expectations. He cited the 25 basis points. He did mention, let's keep the door open to discovering what needs to be done given this, very, very rapid changing environment around the war. But I think the point that we need to remember is this. We have spent the last 18 to 24 months obsessing about this moment. We were talking about raising rates, then it went to talking about raising rates, and now we're actually in the world of raising rates. So I think, what people will be looking for very, very closely from Powell is not only about the first rate hike, not only about the series to follow. The market expects about 25 basis points increases, but also signals around the balance sheet. That's what's key.
So can the U.S. economy, and maybe by extension the world economy, at least work through this notion that the Fed is going to be tapping the brakes on the economy and inflation? Can we expect market volatility because of this, or is the market largely already priced in what's going to happen with the Fed?
Yeah, I mean, the point about the rising rates, that's something which the market perfectly understands, because as mentioned, we've had about 18 months of understanding of this. The other thing the market has learned is that, relying on the Fed puts, i.e. the Fed will always rescue markets, is no longer relevant. And the point is that it's all about inflation. And I think what came out of the last inflation reading is it's about the broadening of price pressure besides energy. I mean, just consider the fact that the price of food for Americans that is being purchased at home is almost increasing at a 9 percentage points increase. So I think it's all about, the crux of it is, to what extent can Powell pull off probably the most impressive central bank action in decades of managing inflation without triggering the U.S. economy to go into a growth slowdown / recessionary environment. And it all rests upon the strength of the labor market, which is amazing. It rests upon the level of pent-up savings of consumers and consumer confidence picking up after hitting actually 10-year lows recently, given the war.
Annika, I mean, the markets have already, at least here in the U.S., seen market pullbacks over the course of the last several weeks, even before the Russia invasion of Ukraine. Is it fair to say now, though, that perhaps there is a buying opportunity, or do we think that there is more volatility ahead just because we don't know what's going to happen in Russia and Ukraine, and we don't really know what's going to happen with China, given this newest round of COVID lockdowns in Shenzhen?
Well, that's it. So, there's always about the equity risk premium. And the point is that prior to the war, as you say, the equity risk premium rose up sharply because of this concept that we can no longer rely on the Fed puts. Powell, prior to the war, had been very outspoken about keeping the window of options totally open from a monetary policy perspective. And that's key for markets, because over the last 10 years, the markets have been dominated by monetary policy action. That's what set asset prices going up. So the good thing is that equity risk premium has come in. The good thing is that awareness built up has been coming in. In terms of where equity markets go from here, there's two words that an equity investor must remember, must be plastered into their brains, and that is pricing power. We've gone from an environment where we had inflation. It was cited transitory. Central bankers conceded and said this is not transitory. We're now back in we're now in an inflation discovery environment. We simply don't know what we don't know. We are seeing a broadening of pricing pressure, even beyond the war. Think about the supply chain disruptions, the blockages of the Suez canals, etc. 2021. Sure. We haven't even worked through that yet, let alone, the massive disruptions that come out of this. So the two words you need to remember are pricing power. Which companies truly have the ability there?